Today, we'll review a number of new data showing the current state of Tesla's business and stock. First, we'll review the entire list of milestones that Tesla has achieved ever since it hit its all-time high stock price of $415 in November 2021. Second, we'll show you the stock price performance of new electric vehicle companies, and it's no surprise that only BYD and Tesla stock are up in 2024. Third, analysts from Jefferies are recommending Tesla to raise equity. Should Tesla do it? Fourth, there are reports that Elon Musk XAI is raising another $6 billion to buy yet another 100,000 NVIDIA chips. This is great news for Tesla. According to the sources, the new supercomputer will also be used for Tesla full self-driving. This is very surprising if that's true. Fifth, Chinese automaker Xiaomi has stepped up to follow Tesla's lead and said they will integrate 48-volt near-by-wire technology. And finally, the CEO of global battery giant CATL had apparently said that Tesla's 4680 battery technology is going to fail and never be successful. Oh, this is going to be fun. I've got Jeff Lutz with us. He's an ex-Supply Chain C-Level Executive from Motorola, Google, and Lenovo. He's currently running his own consulting firm, serving mega cap tech in supply chain design and manufacturing. Welcome, Jeff.
Hey, Herbert. That's a mouthful. There's a lot going on in news.
So this one is focused on Tesla's business in stock. We're going to compare what different people are saying, but how far Tesla has moved ever since its all-time high. And it's a long list. It's a really long list. So Nick Cruz-Patain listed it all out. Here's, Tesla reached an all-time high, $415 on November 2021. It had a market cap of 1.2 trillion at that time. And as we know, we're still below the 415. We're in the 350s, 300 mark here. But in that time, since that day, Tesla produced over 7 million vehicles, record 33 billion cash on hand. Production deliveries exceeded 1.8 million vehicles, 96 billion in revenue versus 53 billion at the time, on pace to generate 100 billion plus in 2025, 2 billion miles driven on FSD. Model Y became the best-selling vehicle. Cybertruck's the best-selling EV truck in the world. It's now profitable. They've unveiled the Cybercab and the Robovan. They have promised or forecasting unsupervised FSD coming 2025, which is next year. Massive advancements in AI. You got the Dojo training system. The AI training compute capacity hit 90,000 H100 equivalent GPU right now. Record energy deployment. Shanghai Megapack factory is underway. Optimus Gen 2 performing tasks in the factory already. All the cars ranked most American made, expanding sales to more countries. It just goes on and on. 400,000 FSD users, FSD Beta 12, FSD 12, version 12. All these features, 100 million 4680. The Tesla Semi is now production ramping. Just dry cathode, the power walls, it's supercharging stations, and this is just the beginning. It's a huge list. I thought that it was a nice list. What do you think, Jeff?
It's interesting to compare the company, to how far it's come. And it's a great list. And this is where analysts and retail and this is where everybody's split, because everybody just wants to go in and kind of pop numbers into a spreadsheet and say, well, the Bloomberg terminal told me that the current, PE is this, the forward PE is that, and this is where other companies trade. But what other company do you compare Tesla to? And then even if you try breaking it down to its components, which others are doing, that even becomes more difficult too, because where do you put the licensing business and what value do you put on that, and how do you do that? So how you value Tesla, there isn't necessarily one correct answer. The question is like, do you understand everything that's going on, both in present terms and in future terms? And then the other big thing that's really important is, do you understand the rate of change and improvement that's coming? And a lot of people that call themselves analysts are completely missing this. And this is where I think that there's going to be tremendous alpha in this. I don't think people understand what Tesla is doing right now from an AI perspective, this investment in infrastructure, and what ultimately the rate of change is. Tesla is saying that they will have experienced, once they get V13 out, a 3 orders of magnitude, a 1000x improvement over the year. And I see people out there that are trying to second guess this and saying, well, I looked in this tracker that's got a few dozen cars that are people are manually reporting into, and it says this, and then Tesla's saying something else. Tesla's got billions of miles and hundreds of thousands of vehicles that they see the data aggregated. By the way, they see worst case, they see best case, they see the aggregate. They have all kinds of metrics. So I'm going to believe what Tesla's saying. And there's analysts that are saying, well, you're gullible or this or that. No, there's a way to look at large data pools and data sets. And the analysts that I see talking about this and talking about FSD and talking about improvement are not measuring relative improvement. They don't know how to measure relative improvement. They don't understand what large sample sizes and why they're important and what they mean and how you can be fooled with both on the positive side and the negative side with very low sample sizes. So Tesla's just a completely different company than where it was in 2021. By the way, in 2021, I was there. I was an investor. I've been investing since, early 2013. And I remember the calls of, hey, this company is essentially just producing automobiles. And there was a promise of autonomy and in services, but obviously it was not there yet. But Tesla, I remember at that November timeframe, peaked, I think, at a 255 PE. And, when it was at 50 and 70 PE, I saw every analyst coming out saying, this is ridiculous. This is outrageous. It shouldn't be trading here. And maybe true, but I mean, it grew to 255 PE while everybody was on the sidelines screaming how outrageous it was. So, and you have Palantir out here now. I mean, it's peaked up significantly. I think analysts struggle to value some of these companies, especially the ones that are working on real world AI. And so I think my summary of this is just what Tesla had in its portfolio, both in terms of present terms and future terms, and the rate of change. If you compare it to 2021 versus where it is today, completely different company, at completely different scale, and they've actually moved further away from the competition than they were in 2021. So you really have to ask yourself, what are you ultimately doing if you're just going to look at what, is some consensus in a Bloomberg terminal? I mean, that's a data point. There's data that you can gather from that, and it's useful and it's helpful. But properly valuing and analyzing this company has become far more difficult. And I would say you're going to see a much higher variation. This is why we're seeing all these wildly different prices from the analysts now.
Yeah. So, great list. We saw all the milestones that Tesla's been able to achieve. But of course, in November 2021, economy was in a totally different place. The money available for investments was very different. But if each of these progresses forward, it kind of counters that. Something I like what you said, which is you need to consider that. So in this year, 2024, we actually can now take a look at which of these new electric vehicles actually are investors bullish for, and there's only two. And now Michael Dunn, I've interviewed him a couple of times now. He's called it EVs, but it should be new electric vehicle companies. Guess who those two are? It's BYD and Tesla. Year to date in 2024, BYD's up their stock by 26%, Tesla's up by 25%. But look at all the other car companies that are electric vehicles or new electric vehicles. Rivian, Lucid, NIO, these are the pure. Polestar, Li Auto, Zeekr, Xiaopeng, Leap Motor. So that's just one indicator, the stock. In the meantime, if you take a look at the EV sales growth, and I like this because this is actually 2024, estimate of 2024 now. It's this latest data here. EV sales growth is slowing, but volumes are still going up and will make up 20% of global vehicle sales. So it's 20% of global vehicle sales this year. You can see where most of it is in China. You can see that China is making a huge jump. Europe kind of feels like it's a flat just by gauging here. Same thing with North America. Mostly in China, still going close to 16.7 million electric vehicle sales for the year. What do you think about these data points?
Yeah, there's going to be, I always try to look at these from a supply chain perspective, and I look at some of the costs of the major subsystems in these products. And I believe in this time period that there's there's going to be a flip occurring where not only from a Tesla EV, but other EVs are now going to be, spec for spec, a better value per dollar than buying the ICE equivalent vehicle. And, again, when Ford and GM and others put these EVs out a couple of years ago, the cost per kilowatt hour for batteries was still, anywhere from the $120 to $160 per kilowatt hour. And now there's LFP options that could be even the $40 to $60 range. And, that's meaningfully different. And then people are getting more efficient in terms of how they're designing vehicles and reducing mass, which can reduce the battery pack size. And there's been some real advancements. We'll talk a little bit later in terms of the communication structure inside of the vehicle and how many switches and just this whole complexity inside of the vehicle, which in some of these car manufacturers, they haven't needed to touch this in years. By the way, when we had the COVID supply shortage, one of the reasons the auto industry took so long to recover is the silicon that they were using for a lot of these switches and inside of the vehicle and in communication instances inside of the vehicle. They were using 20, 22, 30 nanometer silicon. And just to put that in perspective, today, your latest iPhone is using 3 nanometer silicon for the A17 chip in it. And TSMC, their latest nodes are, but 3 and 4, and same with Samsung. So they're using such old technology, and that older technology is lower volume and therefore higher cost. And so anyway, I just, when I look at that chart, just to summarize it really quickly, I think there's a big undercurrent happening where the cost of EVs have crossed over from a gasoline vehicle perspective. And so we had this slowdown in just overall vehicle purchases over the last year or so with the economy. It's been okay. It's been mixed in some areas. Sometimes it's good, sometimes it's not so good. We had high inventories in the US, then they were bled off. So there's kind of a story in each region going on. China slowed down, China may be picking up again, and there's stimulus coming. So if you look at the arc of history of EVs and shipments, there's been these points of stagnation, or these slowdowns in growth. But make no mistake, it's still growing, and I could see it, popping up again soon. Especially now that we've had this backdrop of the costs, of these vehicles coming down, so significantly. So I expect this to keep moving up, and then we're going to get to this new transition in transportation with autonomy, and I think you're going to see another bend there.
Okay, so we've got a institutional analyst, Jeffries, because of this, growth in potential for robotaxi. They're suggesting for Tesla to raise equity. Let's see what you think about that. Jeffries maintains a hold. Again, this is always just I just don't understand this, but they raised their price target to $300 from $195, and they still say hold. I guess they don't want to sell because they realize that they're on the wrong side of this. But then they suggest this should take advantage of the stock rally and raise equity. Should capitalize on its recent stock rally by raising equity, citing the company's significant share price recovery and the favorable conditions post-election. So as soon as the stock rises, let's go ahead and raise money or raise equity. Rebounded 30%, bring its valuation above $1 trillion, positioning it well for an equity raise. They believe Tesla could benefit from additional capital to support its expansion into high-cost ventures like autonomous vehicles and robotics. In the meantime, they're obviously still holding it a hold and still thinking it's just a $300 stock. What do you think, Jeff?
Yeah, a lot of analysts are chasing at this point. A lot of them were caught by surprise by the move. I look at the earnings. The third week of October is this backdrop where they beat EPS. A backstop, I should say, and a backdrop. They beat EPS, they beat gross margins in all three segments. And I think the setup in Q4 is for them to do it again. I mean, we're kind of at this place. It's hard to predict COGS, But I think the setup in Q4 of them growing volumes, I think there's a good setup. I think there's a good setup for them throwing off more cash as well. So, I mean, autonomy isn't getting worse. It's getting better. They're building more vehicles, not less. They've been able to maintain their channel inventory as they grew production. They've been able to maintain their balance sheet inventory as they grew both energy and vehicle production. So this company is really, really running well. So I look at these analyst price targets moving, and I think everybody's kind of a little nervous of like, Tesla's made a big move. I mean, it was, 220, 230 a couple of weeks ago, and it does a 50% move pretty quickly. I think a lot of them are nervous and they're chasing, but I think Tesla's also, painting a backstop with the fundamentals, and they're there from Q3. I think they're going to be there from Q4. I think people are totally misinterpreting the $7,500 credit potentially going away. We talked about it a little bit before, Herbert, in another video about the permutations of what can happen there. But I think that could actually drive demand forward for some period of time and act as a bridge to the next vehicle. So it's arguable, it's debatable. You can say someone's like a hopeless bull or they're a hopeless bear, but I hope people actually look at the actual contents of the debate and actually consider it versus just, going one way or another. But I think you're seeing this big split in the analysts, of the analysts in the $100 to $200 range. And now you have the analysts that are going well above $350 into $400. You're seeing a big split. And the split is those analysts that are on the higher end they're weighting more of this Musk relationship to government, where it went from being on the outside and actually being lawfare to being on the inside and actually being and helping his companies. It's been a complete 180. They're putting weight on that. They're putting weight on Tesla's development, billions of dollars of spend and lead in R&D on real world autonomy. And of course, and then that would lead into the humanoid. So I think there's just this split in the analysts. And a lot of them still aren't putting value on autonomy. They're not putting value on the humanoid at all. And these are all upside things. And of course, they're not putting value on their network infrastructure capability and what they're going to be able to, enable there. I just want to tell people that this whole thing of standing up a data center, whether it's 19 days or whatever the full time period was from start to finish, that is a competitive advantage it's in itself. That's a part of the supply chain of going from this high value, infrastructure silicon for training to it being online. The Dells, the SMCIs, the HPs of the world can't get you to that end state. You need the OEM to be able to do this. So Tesla's raising eyebrows with their competition. Their competition's concerned. Some of the analysts are getting this time to value aspect of their ability to stand up a data center, get training, get output, and get monetization off it quicker than others. A lot of them are actually missing it. And I don't hear them talking about this enough on TV. But this is Tesla really doing this time to value bit on the network infrastructure side and the AI side, and they don't get credit for it. They don't even get talked about as an AI company, and they're quite frankly, they're the fastest in the world at deploying this and actually converting it to real revenue, as told by Jensen, as told by many who are actual experts in the industry.
Right. And so this is where it scratches my head I scratch my head when I think about these analysts asking for the raising equity now. I was saying the same thing early in January, because at that time, we didn't know yet what Tesla's approach was to, build up these AI factories, to build up their bots, to get into robotaxi. But they didn't need it. So we're here now, as of today. They were able to grow their cash by $3 billion. They were able to reduce their operating expenses. At the meantime, they've been investing tens of billions of dollars into the AI factory at Giga, Texas. They've got the bot in the 3rd generation. They've got the design of the Cybercab and plans for a robotaxi. They don't need it at this point. If they raise equity because they think that they want to add, they can do that. But the cash flow that they're getting now, they've managed brilliantly to accomplish all this.
They're in a unique position where the more the product that they deploy, the more cash that they're going to be able to throw off near term. and those turn into subscriber units that can generate more value in the future. This is like increasing, the amount of iPhones out there and then driving the services business on top of it, getting to 1 billion iOS devices and then and doing this massive R&D on the services business and throwing that out there. And as your install base grows, your services business grows. So Apple ran this play already, and Tesla's running this play now on AI, where they're getting more and more of these units out there. And the more they put out, the more cash they throw off short term, and allows them to build up and do more on the infrastructure side as well. So it's actually, I think they've done nothing but grow their advantage over the last 2 years.
So one company that is raising equity, it's Elon Musk's XAI. They're raising another $6 billion to buy yet another 100,000 NVIDIA chips. So this is David Faber from CNBC reported this from sources, some of sources that he was talking to, that they're going to raise another $6 billion, another 100,000 NVIDIA chips. Sources told Faber that the funding, which could close early next week, is a combination of $5 billion expected from sovereign funds in the Middle East and $1 billion from other investors. What's interesting was this sentence here, Jeff. The money will be used to acquire 100,000 NVIDIA chips. Tesla's full self-driving is expected to rely on the Memphis supercomputer. This is the XAI supercomputer. Okay. Musk's AI startup, which now seeks to understand the true nature of the universe. Okay, we already know that they're working on Grok. We know that Grok is very important for Tesla's business, and it's going to be important for robotaxi and bot. But this idea that they would actually use it for full self-driving too, that seems interesting, and I don't know how real that could be.
That looks like it could be either a misunderstanding or, there's information about the LLM going into the vehicle and being, closing this loop between the intelligence needed, the vision in, control out. That's the Texas, Colossus. Sorry, that's the Texas computer, in Giga Texas. And maybe what they're talking about is some allocation of the Memphis data center for the LLM that would go in the vehicle. And that could be, the communication both from the customer in the vehicle to the vehicle itself. And potentially that LLM could also have some layer of intelligence as another form of input to the vehicle. Like, hey, I need to get, is there a faster route? Can we avoid construction? Hey, avoid these, take me here, but avoid these streets. Like, we don't have that right now today with FSD, but by having Grok in the vehicle, that could be that next level. So future is upon us.
Yeah. And the analysts are following along now. So here's another analyst, RBC Capital, Tom Narayan. He's always been pretty positive on Tesla. He said so many times, we believe in autonomy, but then he'll say, not until 2040, we don't believe in the timing. Well, of course, he's following the stock. He's raised it from $249, his price target, to $313. Apparently, Tesla hosted Wall Street investors at Giga Texas, and what Tom said is that these sessions gave it increasing confidence in Tesla's ability to achieve its autonomy goals and highlighted the comparative advantage it has over both legacy and EV makers in building cars. So it looks like that, we're starting to see more and more analysts believing this. So next story here is Xiaomi. They have announced that they're going to be the first automaker in China to integrate the self-developed 48-volt steer-by-wire technology into its next vehicle. It also presents 48-volt brake-by-wire technology, improving response time and mileage, omitting the need for brake fluid. So this is technology that Tesla has developed. They were recommending everybody to follow the 48-volt model. They, in fact, released the PDF and said, here you go, please follow it. And we got the Chinese here stepping up and saying, yep, we're going to do the same thing.
I have some advice. Watch out for Xiaomi.
Mm-hmm.
They have, I competed with them. They've acquired a lot of talent from the smartphone industry. I know people there. They're very talented. They do a great job in smartphone, and they have these core tenets around innovation, around speed to market, and they're global. They know how to get. They know they're a Chinese company that's in global distribution. So they're all over Latin America. They're all over Europe. Okay, they're all over Asia. Obviously, all over China. So be careful about Xiaomi. They are not a flash in the pan, and I believe both from a time to market and closing the gap in some areas, and from an automation perspective, they're better than most of, if not all, of the Chinese. I think Geely and I would put Xiaomi way up there in terms of driving. They're almost on the other end of it in terms of driving automation. And what that's going to allow them to do is that's going to allow them to export their manufacturing process and be able to set up in Eastern and Western Europe and abroad, potentially in Latin America and so forth, because they've designed a supply chain and they've designed a manufacturing system that's highly automated. Whereas a lot of the other Chinese manufacturers will struggle on globalization because they're a bit more manual in their approach. So watch out for Xiaomi.
I love it. Yeah, you actually worked with them in the past before. You competed against them. They're a tech forward company, so this makes sense if they would jump into the software version instead of the hardware version of these technologies. And they have been following Tesla as fast as they could. They already announced the neural net approach. They already announced the non-LiDAR approach, vision only. So this next story is about another Chinese global company called CATL. They're the battery giant. Here, the chairman, the CEO, kind of we're not quite sure what he's doing here, but apparently, in his initial discussions with Elon about 4680, he said that battery tech is going to fail. It's never going to be successful. The world's biggest battery maker says Elon Musk's 4680 cell is going to fail. His chairman isn't a believer in Elon's cylindrical battery quest. And it's going to fail, never be successful. We had a very big debate, and I showed him. This guy, Robin, right? Showed Elon that it's not going to work. Elon was silent. He doesn't know how to make a battery. Betting against Elon is a bad idea. And then you said, I always appreciated when my suppliers gave me constructive feedback behind closed doors and welcomed it. In this case, CATL providing quotes for a blog is not okay. CATL will lose business. Robin's biggest concern isn't the 4680. It's Tesla starting their own LFP development and supply chain, and the 7 other suppliers ramping up LFP. Yeah, so clearly it's not that 4680 will fail. He's just very scared about, you got another company here. I think the thing that we need to dive into, Jeff, is that I don't believe that while this article was written today, that this was a new quote from Robin from CATL. I think he was just telling the story of what his first reaction when he was talking to Elon many years ago, that this is going to fail. But of course, proven today that it's not a failure.
Yeah, I know. I know some people have messaged me saying, "Oh, they're a friend," and they could. Yeah, these relationships can change really quickly. Tesla putting out those requisitions for LFP engineers was recent in the last few months. And that could definitely change the relationship. And the other thing is LFP's been doing well. BYD's ramped up. They're a clear number 2. Goshen's ramped up. They're a clear number 3. And there's probably 3 others behind them. Others are going to do LFP. Tesla may do LFP. They have to. They have to keep their foot in these technologies, and they have to have the ability to produce, especially when you look at what's going on from a tariff perspective. Especially when you look what's going on from a technology perspective. We can't get back into a situation like there was with lithium hydroxide, where these costs went through the roof a couple of years ago. The supply bottlenecks became a huge issue. Now we're on the other side of that. Now we're in an oversupply situation. So everybody's kind of, but when you're in these companies, you're making long-term decisions. You have to look at, what bottlenecks, what areas could kill you. Where's their geopolitical risk? Where do you need localization? It's clear to me that Tesla needs the ability to be able to localize LFP manufacturing where they in the major continents. It can't just be this stuff that is made in China cheaply and imported everywhere. That's just not where the world is going from a supply chain perspective. And so it's important for Tesla from a cost perspective, a leverage perspective, a geopolitical risk perspective, a tariff risk. There's all these reasons for Tesla to be involved in this. So I don't know why the article comes out in November. I think The Verge should be very clear. If this is a 6 or 8 month old quote, then they should say that. I think it's, whatever on them for not doing that. But even if they did, if the CATL CEO has a quote out there and it's that old, that's even to me also egregious for them to have a quote out there about one of their largest customers and saying this. So yeah, some people are like, well, yeah, they don't have time to respond to every magazine or blog. That's fine. They don't. But usually when you're in the supplier end of that relationship, the last thing you want is you want media out there of you, shit talking your clients. And, these aren't small publications. Reuters, multiple companies have picked this up. So if it's not real, then he should put a quick statement out, whether it's in Chinese media imported over here, or he gets it directly sent here. I've seen this happen all the time. He should clear it up. But I think the real thing is their concern about them losing their grip on LFP. And their real concern is they were flooding the US with batteries, both on the infrastructure side, on the large scale utility storage, and they were flooding the US for battery packs. They're in Rivian, they're in maybe it's not them in Rivian, but in Ford and others. They're flooding the US, and now that's all getting cut off. And so I think, tensions are going to be heated and flaring. If it's an old quote, fine, he should clarify it. If it's a new quote, I think he should clarify it. I would not want to be on the wrong side of Tesla.
So I just confirmed that it is a new interview today, but he was talking about when he met with Elon earlier in the year in China. But he's still, as you said, the way you described it was exactly correct. He's still pretty much, insulting Elon. He said, I talked to him and I wasn't impressed with Elon's knowledge of batteries. And I told him how it would fail. And, even if that conversation happened earlier this year, yeah, this is not good news.
Can I tell you what would happen what could happen?
Yeah.
Someone of Elon's stature does not need to respond. Mm-hmm. But I mean, just getting a phone call, I'd be like, they're just disinvited from the next bid. And that bid could be for Optimus. Optimus is going to be 4680, but that bid could be for a number of different things. It could be for these next generation.
He might already have been.
Yeah. So they may have been disinvited.
That's why he's out there now.
And that's part of the reason. But even as a reaction, they could literally be in a bid room. They could be in bidding for something now, and they could just be told that you don't have to come back anymore. And that's how it usually will happen. You don't want to you're not necessarily wanting to throw fireballs here because you never know who you're going to need in the future. But they could be politely getting shown the door.
I think that's what happened, and I think that 4680 is on a ramp, and so he's going to try to badmouth it now to try to reduce its impact.
And again, BYD Blade, BYD is on a good ramp. BYD has a good relationship with Tesla. Goshen is on a good ramp for LFP. So they have a lot of competition.
Thank you, Jeff. Love it. Perfect. Appreciate this. It was a good show. Follow Jeff on his X account at the Jeff Lutz and subscribe to him. Thanks. Appreciate you guys. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.